that better?
Yeah, it's a little brighter. Looks good.
So we can go ahead and start, Ms. Terry.
Okay, good morning, everybody, and welcome to the ABCs of Contracting series. I am Terry Reed, and I am one of your moderators for today. Today, we will be featuring Janet Aguilar, the Vice President of USI Insurance Southwest, who is going to walk us through the basics of bonding. Before we get started, let me also introduce my co-moderator this morning, Charlie Lopez, our MBDA Business Development Specialist, operated here by the Hispanic Chamber.
Good morning.
So our chamber is celebrating our 30-year anniversary in 2020. And let me tell you a little bit about us. Charlie, go ahead.
So here, our vision at the Chamber is to continue to be the core component for the El Paso region in fostering entrepreneurial economic development, where our existing companies are growing, where our entrepreneurs are reaching new horizons, and where our small, minority, and women-owned businesses are thriving and outpacing all other markets.
Thank you. Some of the benefits of the chamber obviously is networking, getting to know each other and doing business with each other. Our business development specialists are in-house, and their job is to connect you to opportunities in financing and procurement. And the chamber prides itself on being an advocate for you, being your voice. So Charlie is going to tell you a little bit about our Entrepreneurial Technical Assistance Centers, which are government funded through the chamber and help our businesses one-on-one. Charlie, take it away.
So here at the Chamber, we have two centers. One of our centers is the Women Business Border Center, where we help our startup businesses. And then we have the MBDA Business Center, where there we help businesses that are already established continue to grow with any other questions that they have.
Absolutely. Thank you, Charlie. These two federally funded grant centers also have COVID-19 response teams as well. And we're going to tell you a little bit more about what they do later on in the presentation. But please stay tuned for that. And if you need any assistance or your business has been negatively affected by COVID, as so many have, give us a call and we can help you through that. So with that, I'm going to stop sharing my screen for a moment and bring us right into Janet's presentation. And I will introduce Janet Aguilar, who is our speaker today. Janet serves as the Vice President of USI Southwest and brings over 4 decades of experience in the insurance industry. 4, not 40. Specializing in commercial insurance to the El Paso, Juarez, and Las Cruces area. Janet is the chair of the Las Palmas del Sol Board of Trustees and has served as the chair of the board for the El Paso Hispanic Chamber and the United Way of El Paso. She is a member of the Federation of Insurance Women of Texas, Insurance Professionals of El Paso, the El Paso Hispanic Chamber, and the United Way of El Paso County. Janet has been recognized as a Hispana Triunfadora by the McDonald's Corporation, Regional Woman in Business Advocate of the Year by the U.S. Small Business Administration, a Woman of Distinction by the Texas Association of Mexican American Chambers of Commerce, Woman of the Year by the Insurance Professionals of El Paso, and she received the coveted James Elliott Award by the Insurance Agents of El Paso. Janet, thank you so much for being so willing to join us and provide the basics of bonding to our contracting audience and to our Facebook Live audience. With that, I'm going to turn off my screen and turn it over to you. Thank you so much.
Ladies, thank you very much. It really is an honor to be a part of the Hispanic Chamber and helping our businesses to grow and to understand what is necessary to increase and to make their businesses successful. One of the issues that a lot of businesses got, especially in the construction arena, is bonding. Bonding is an animal within itself. Terry, you want to go ahead and uh, there you go. It's an animal within itself, different than what insurance is. So we're going to go over the basics of the bonding process. There will be questions I may not be able to answer. Please do not hesitate to comment. I will get that information and endeavor to answer any question that you have got. So what we're looking at in our objectives, as you can see, we're going to review the basics of bonding, discuss what the surety underwriter considers a complete submission, discuss the different kinds of bonding that is needed, type of financial statements, and then the 4 critical people who can help build your surety relationship. So when we look at a surety, what we're looking at is we're looking at the professional cosigner. That's going to be your surety company. Your formal engagement, that's your contract owner, your project owner. And then the one who becomes legally liable for the debt, default, and failure, that's going to be the contractor himself. Okay, so when you talk about a surety contract, you do have the 3 individuals. You have the owner, the project owner, you have the surety company, and then you have the contractor himself. So it's a 3-party situation. Whereas when you talk about insurance, it's between the insurance company and the contractor only. So what the surety bonding does basically is it's a professional process that a surety company goes through to pre-qualify a contractor and then ensure the project owner that these contractors can perform the contract according to the terms and conditions, and that the contracted price, delivery of schedule, and that they will also pay the laborers, the subcontractors, the suppliers associated with the project. Surety companies are not they do not anticipate losses. So they do a very rigorous performance on anyone who is looking to do a contract. So when you look at a surety bond, consider the idea, it's the same kind of process as if you were going to go and get a loan from a bank. You need to be able to prove what you can do, how you can do, your people, and we'll continue that part of it. Now, when you look at a contract bond, there are basically 3 bonds that go into it, and they all tie in together. The first one is going to be your bid bond. And that particular bond, basically, it's when a contractor submits a bid bond, they are in good faith saying that they can provide the information, they can provide the rest of the bond. They are intending to go into a contract at a price bid, and they are going to be able to provide the performance and payment bond should they receive the contract itself. Now, the interesting thing about a bid bond, and by the way, once you have the bid bond, once you have all of that, and a surety company is not going to charge you 3 times. It's going to be based on the total amount of the bid itself. So a bid bond, what it does is it tells the project owner that you are serious and that you can come to the table. Once you receive that bid, once you are selected for the project, then your surety company is going to want to have a copy of the contract to make sure exactly what this contract is all about. Normally, you will see that a bid bond is either between 5% to either 10 or 20%. Normally, that's when you're talking about a government bid. Most of them will require a bid bond of 5%. Now, what happens when that contract is approved and you are the owner? The contract is forwarded to the surety company. They read the information. They make sure that there's not any funny stuff going on, that you're going to be able to do it. And if they approve all the contract, then you move forward with the performance and payment bond. If the surety company reads the contract and sees that it is not something that will be to your advantage and you would not be successful in it, and they say, we pull back from the performance and payment bond, the surety company guarantees paying that percentage of either 5, 10, 20, whatever it was on the original bid. That doesn't happen very often. I've seen it maybe once or twice, but understand that is a part of the process. Okay? You want to move to the next one? Oh, we've already done that. The performance bond. So you got the bid, you got the project, the surety company says, go for it. Your performance bond says that you are going to do what, where, when, and how based on the contract itself. So that is, you're going to use the materials that are required. You're going to do it in a timely manner. You're going to do it on the specs that were there. And that's what your performance bond guarantees. Next one. Payment bond. Payment bonds guarantees that a contractor is going to pay all of their subcontractors. They're going to pay the materials. They're going to pay the labor, everything that is associated with the contract itself. That allows, that basically it tells you that you're not going to get any liens on the project. Okay, so we're on the next one. Let's go to the pre-qualifications. That'll work. So a surety company is going to look in depth to the contractor's entire business operation. And they're also going to look for the PQ, which is performance qualifications, to determine that a contractor can do what he says when he says he's going to do it. So an underwriter is going to look at the capacity to perform, the financial strength, the track record history of the company, the organizational structure of reporting, business continuation plans, trade references, and then they analyze all the projects that are in what we call the WIP, work in progress, to see what it is that you're doing. Capacity to perform. If you are a road contractor or pavement, and then you decide to build bridges, what's your capacity? What can you do? How is it that you think you can do this? Your financial strength, more than anything else, your financial stability, your payment history is going to be looked at on a regular basis. They're going to look at what you've done in the past, who you are, where you came from, and organizational structure. Who's in your business? Who is doing the different projects, the different jobs that are required within your company? And are you going to be able to continue? Do you have a plan? Your trade references, are you with the 8A Association? Are you with the different general contractors organizations that are available? They want to know that because it provides them the idea that you are a professional and you have trained yourself. And then again, how many projects do you have out there? If you've got 15 projects going on that have not been completed and now you want to add another one, there's going to be questions as to how you think you're going to get this done. Shall we, next one? So when they look at the checklist, they look at the good character, they look at the experience. We discussed that a minute ago. Your financial strength, your credit rating is huge. Huge. If you're not paying your bills, if you've got a bad credit score, it automatically provides a red flag to a surety company, which is going to be your credit history. And then what have you established as far as banking relationships and lines of credit? Next. So the sureties, we've got the 3 C's. Capital, we've talked about. Your character, is it a good, are you a good company? Do you do what you say you're going to do, when you're going to do, and not leave any projects undone? And what your capacity is. Are you able to do this project? Next. So your capital, they want to know about your working capital. They look at your accounts, they look at your cash, your accounts receivable, your inventory. They do take out your prepaid accounting receivables when they're doing the calculations. So those are things that are already taken care of. What is your working capital? Working capital is your cash minus your liabilities. Next one. So your capacity, what have you done in the past? What's your history? Who is the construction history of the owner? Are you a brand new, have you just decided to go into the construction business, or have you been in that line of business for 10, 15 years and are able to show what your history is? Who's going to manage your field operation? Is there somebody out there that is overseeing? Is there somebody there who's doing the estimating? And then who does the in-house billing and job costing? Because if you underestimate your job costing or you're not taking care of your accounting, it's going to really create a problem. To lose your bonding, and we have heard in the past of some countries that have lost their bonding line. What they look at is, have you lost money in the last 3 years in a row? Are you personally borrowing from the construction company or your company? Are your statements not matching the AICPA, which is the American Institute of Certified Public Accountants? Are you not meeting those guidelines for contractors? Do you have continual profit fade on jobs? You lose money on that job and they see a history of that. And my favorite is, do you have yellow fever? You got a lot of trucks out there, you got a lot of equipment out there, and your assets are taken into consideration as far as your construction equipment is concerned. If you have too much construction equipment, it can create a problem as far as your assets. All right, how do you lose your bonding capacity? Huge. Not reading contracts before they are signed. I can't tell you how many times I have seen that, where someone was just so excited that they got a contract that they never bothered to see what the contract required. And once you sign it, it's a problem. Not having accurate internal job costing. Somebody's made mistakes and you have underbid, and the project owner doesn't care. This is what you've said, this is what you wanted, and that's what they're expecting. Again, having too many jobs out there. If you've got 5, 6, 7 jobs, what makes you think you can bring on another one and get it taken care of? The other part that we see is when you are a general contractor and you do not require that your subcontractors bond. So if they fall down on the job, if they are unable to complete, where is your protection so that you can get this taken care of? The other part is doing jobs in unfamiliar locations. Can't tell you how many times I've seen contractors who got a job in San Antonio. They're from El Paso. They have to go to San Antonio. They have to get their employees. They have to get their equipment. They have to do the lodging. They have to do all these different things that were not taken into consideration if you're doing a job outside of your arena. You need to make sure that you understand what those other costs are going to be. Last but not least is not reviewing insurance requirements. Again, kind of like reading the contract, not knowing what is required as far as insurance is concerned, and then all of a sudden you're between a rock and a hard place. I've seen this happen on a couple of occasions, and it will end up costing you because they may need higher limits of liability, they may need workers' comp, which you didn't have. I mean, it goes on and on. My recommendation is when you get a contract, you read it. You read all of it, your insurance requirements, get that to your insurance agent so they can tell you exactly what it is that you have and what you don't have, and you can move forward. Okay, now I'm going to tell you on the financial ratio information. I am not a CPA. I am not an accountant. I can read, you can flip to the next one. These ratios are information that you should have your accountant, your CPA. You need to be involved in that to know whether or not you are able to meet the financial obligations, whether or not you can absorb any immediate or sometimes unexpected financial obligations, whether or not you review, an underwriter will review the debt to net worth to make sure that the owner's investment and the creditor's investments will get taken care of. Next. And it continues with the different ratios. Unless you all are CPAs, unless you are accountants, I would highly recommend as you move forward with getting contracts that you have someone that understands these ratios. I've seen them, I've used them, I have studied them, but again, I do insurance and I let the CPAs do the financial part of it. Take it to whoever it is that you have doing your financial information. Make sure they understand these things and that they're able to answer them for you. All right. So basically what you're doing, again, I mentioned earlier, it's kind of like getting a loan. Your surety company needs to know who you are. They need to know that you have a well-run, managed, profitable enterprise. They need to know that you deal fairly, that you're not going to cheat somebody or you're not going to fall down on a job, that you're going to take care of it, and that you perform your obligations as you have agreed to. They will look at this information. Next. Now, a lot of people get sureties and insurance confused. When you talk about insurance, anyone who can pay the premium can get an insurance policy. Your general liability, your workers' comp, your commercial auto, your property, anyone can do it. You got the money, you can pay the premium, you got a policy. But as far as sureties are concerned, the availability is limited to only those that are qualified. It doesn't matter. You're going to have to qualify with the surety company. On the insurance end of it, losses are predictable. We know in the insurance industry that there will be losses of general liability estimated to be 5%, 10% over the whole market period of time. We know that's coming. In the surety side of it, losses are not expected. Here's the part that I want to bring to your attention. When you sign and obtain a payment performance bond, read the application, read the information, because your surety company is going to ask not only you as the owner, but your spouse, because this is a community state, your partners, their spouses, everybody has to sign. So in the event that there is a loss, in the event that the surety company has to come in and take care of a problem, they are going to come after you personally and want their money back. They're just kind of lending you that money so that you can get the job. But if something goes wrong, they're going to want you to pay. So understand what you are doing there. I can't tell you how many times I've had a spouse go, no. So this is something that needs to be discussed with owners, spouses, partners. Make sure that you understand what it is that you're doing, because they will expect a signature from each and every one of you. Now, as far as the insurance is concerned, there's no reimbursement for covered claims. But on the surety side, reimbursement is required if there is a loss. Just like I said a minute ago, if in the insurance, if you have a loss, your insurance company is not going to come back and say, hey, we want our money. The surety will. So understand there's the difference between the two there. And benefit party on the insurance end of it, benefits party who apply, that's going to be you as an insured, that you are benefited by your protection on insurance. But on the surety side, the benefit goes to the third party or the project owner. They're the ones that are requiring it. They're the ones that want the protection. The benefit goes to them, peace of mind, or in the event that something goes wrong, they are protected. On the insurance side, generally your insurance policy can be canceled for non-payment of premium, or you decide you don't want to do it anymore, whatever the case. Policies can be canceled, generally, depending on the policy itself. On the surety side, it is not cancelable. So once that surety bond is issued, that money cannot be reimbursed to you in any way. So the cost of surety bonds, the premium that you pay on a surety bond is basically the fee to the surety's underwriting services. In theory, sound underwriting should result in no loss to a surety. And if they lose money, they are cranky, very, very cranky. People have asked the cost of surety bonds. It is on a graded amount, normally depending on, and do not quote me because everybody is different. You could see that you've got, depending on your organization and the way that the underwriter feels that you are set up, you can have a preferred or a standard. There are also non-admitted surety companies that you could go to that charge a little bit more depending on what your situation is. But you will see that we give you an example that $1 million bond as opposed to a $5 million is not going to be 5 times the amount. It's pretty much a graded limit. And here's hoping that each and every one of you gets a $20 million contract. Whoop. So your surety team, you need a CPA that understands construction. They are construction oriented. You need a banker, someone who's going to understand to be able to provide you the line of credit if it was required. Always recommend that you have an attorney. You need to understand those contracts. You need to understand those joint ventures, the general contractor's contract. That seems a little redundant. And then your surety agent, someone that is ready to be able to fit you with the specific surety needs. These people are key to you. Your surety bonds, you've got financial security and construction assurance. These are such an important part of what your bond is going to be about. And I know I skipped a whole bunch of stuff, so let's see if we've got questions and if I've confused everybody.
I think you have questions. Thank you so much, Janet. Idali, will you be reading the questions to us, or should I go ahead and do that?
So we're going to go ahead, Ms. Terry, and we'll read those questions for Ms. Janet from the Q&A. And then, so we have a couple from Juan Trevino. He says, if I lose my bonding capabilities, can I acquire them again? How or why not?
If you lose, my question would be, what created the problem that you lost your bonding capability? Then you're going to have to create, or you're going to have to correct the situation that created that. Was it, I mean, there's a plethora of reasons as to why you could have lost it, and obviously payment and performance is going to be it. But if if your finances are not stellar and you've lost it because of that, you need to go and find a way to bring your financials, bring your credit record up to par, and then find a surety company that will work with you. It depends on what your problem was. Is it the end of the world? No, but you got some work to do.
He also asked, Juan Trevino said, what if I barely started my business last year? Does that matter?
Kind of, sort of. If you have just started your business, if I was talking to you, the first thing I would want to know is, okay, you started your business last year. What experience do you have? What is your cost estimator experience? What do they have? What do your managers have as far as experience is concerned? What have you done in the past? Because everyone has to start off. Now, I will tell you that if you started your business a year ago and now all of a sudden you want $1 million contract, there's going to be some discussion there. Who are your backers? What's your line of credit? How much equipment do you have? Where are you at? I would suggest that you find a good surety individual to where you can start working on your capacity. Most surety companies are not going to tell you you have a capacity of X amount because they want to look at every one of them. But you find someone, you work with them, and you get set. I can't tell you how important it is that you do your homework ahead of time and then continue as you are within that year. What contracts did you have last year? Where's your documentation? What are you doing now? Your projects that you have, what percentage of work has been completed? There's a lot of homework involved, and sometimes that's not fun, but it's required.
Right. Well, I think that comes with a lot of other things as well. We also have another question. Is being bonded better than being insured? Do I need both insurance and bonding?
Yes. Again, your insurance, do not compare bonding to insurance. Insurance is going to be your general liability, your workers' comp, your automobile. These are all lines of business that you should have in order to protect the business. If you are looking to get any kind of a contract, that's going to be a part of it automatically. Depending on the contract, the project owner may want the protection to make sure that you're going to do what you said, when you said, and how you said it. Take the two of them apart. They're two separate animals. Now, I will tell you one thing I did not mention is, as you are going through and looking at doing contracting, remember that not every insurance agent will have the ability to do bonding. If you are considering the idea of going for projects that require bonding, go back to your agent and ask them, what can you do? Can you do bonding? I need this, and this. And most insurance agents say, of course I can do it. Okay, make sure that they are ready to go. They may have to broker it. You may have to go to someone who does surety bonding on a regular basis. Many times, an insurance agent who has the ability, who has the expertise as far as bonding is concerned, they are not just going to write your bond. They're going to want all of your business. So be prepared.
Okay. So, and then we also have another question that just came in. What CPA services do you recommend?
Allow me to tell you, I play a CPA on Thursday night at 9 o'clock, Channel 7. but I do not, I do not have any kind of recommendations. What I can do, and if you ladies, if you will put a note there, what we can do is we can find out from the CPA associations in El Paso. I'm sure that there are people who could specialize in contracting. I had one client who had a CPA, and then he wanted to do bonding, but his CPA had not set up his books for contracting. So I think that's a very valid question. He had to go back and they had to do it all over again. And it cost him a couple of $1,000s, and he was not a happy camper. So let's see if we can find you, Terry, Charlie, let's see if we can find you who does that.
Absolutely. Any of the attendees can give us a call at 566-4066, and we'll provide you with a list of our member CPAs, and we'll also let you know which ones specialize in construction.
There you go. There you go.
We do have another question. I have two businesses. Can they both be on the same bonding contract or account?
What kind of businesses are they? I mean, there's questions to be asked there. Is the bond going to be required for both of them, and they want to pile them into one? Or do we have a floor finishing business and a rock wall business, and they're completely separate? What does the contract require? So I can't give you an answer there. That would be something that you would discuss with the surety company. If you're talking about combining the assets, again, that's something that we would discuss with the surety company and see if it's combinable. Are the owners the same? Or do we have 1, 2, 3 owners over here and 7, 8, 9 owners over here? And is everyone going to sign? That's a very interesting question.
Well,
I don't know.
If we have any more questions, we can go ahead and put them in. Yes.
Let me go ahead and remind everybody. I think you all know that the El Paso Hispanic Chamber of Commerce has a really excellent relationship with the SBA. SBA does sponsor and does support bonding through different insurance companies. I will be honest with you, they do charge a little bit more, but if you are a startup business and you qualify through the SBA, you have a good chance of working through the bonding system there. It's a lot of paperwork, guys, but it's not any different than if you were doing a straight surety contract. They're going to ask you information. They're going to require, but it is something to where what SBA does is they have what I call third-party surety companies. So if you have ABC and you go to them and you say, okay, I've got SBA bonding approval, SBA will protect the surety company up to a certain percentage. There is an additional cost involved, but sometimes those contracts, you can pass the cost on to the contract owner. It happens a lot in the government. It's something to look at. And again, get with the Hispanic Chamber. They will connect you with the SBA to get that process going.
Fantastic. So we will be sharing all of the slides with everybody who was participating with us on this call. We have everybody's information. If we don't send it to you, then we didn't have your email, so be sure to contact either Charlie or I. Janet, I have a question. We do work with the El Paso 8A and Government Contractors Association. And so one of the questions I had received was, do you go for the bonds only if you've been awarded the contract, or should you try to put that in place anticipating being awarded a contract?
Normally, when you have got or you submit for a contract, they will require a bid bond. All right. Remember that bid bond says that you're going to be serious, that if you are awarded, you're going to be able to provide the performance and payment bond. So that bid bond automatically says you got to do it. Now, if you get a contract from ABC Company and now all of a sudden they need a performance and payment bond, one, was it part of their contract? And then you kind of have a problem working to get that performance and payment bond. I had one gentleman who was awarded a contract. He came to me after the fact, Terry, just like you said, and because it was what I call a fire sale, he was required by the surety company to put up collateral. And
Wow.
he had to put up a CD, and he got it taken care of. Don't ask me. I don't want to know how. I don't know what he did. He got the collateral taken care of, but they held that CD. The surety company held it, and I think it was 25,000, held it until the completion of the project. So if you wait until the last minute and then you do get a bond, but they require collateral, you have now frozen your assets until the job is done. Why not do it from the very beginning?
Absolutely. That is sound advice. Thank you so much for that. Everybody, I'm going to share my slide again because we're going to thank Janet again for participating with us. On your screen, you will see Janet's contact information. If you have any questions, are you interested in getting bonded, please give her a call, send her an email, and she will get you in touch with the right people to make sure that you get that bond you need. Any other questions? Charlie, you'll let us know. And Charlie will finish up for us really quickly. And then Janet, I'll just ask you if you have any closing comments that you would like to share with our listeners. Please let us know what you think.
Okay, so here we are very excited to announce the two programs that we have here at the Chamber. One being our Small Street, Main Street Assistance Program. This program is here to address many issues that the COVID-19 pandemic has caused El Paso's small minority and women-owned businesses. Eligible businesses will receive free business survival kit with valued over $100 each. And so information on that, you can go ahead and just give our office a call or an email and we'll assist you with that. Another program that we have, it's with the County of El Paso CARES Act. It's called the Work Safe, Work Smart, a small business grant program. This is with the El Paso County rural areas businesses. We are going to be taking forms from Tuesday, September 8th through Wednesday, September 30th. These grants are ranging from $500 to $2,500 to help with PPE equipment, signage, masks, gloves, sanitizers, or anything that can ensure the safety of your customers. And to get more information for that as well, you can call here at 915-566-4066, or you can also go to our website at www.ephcc.org. And then we have our upcoming programs for you, so you can tune in with us for any other upcoming webinars.
Thank you so much, Charlie. Janet, we're going to let you have the final word today. Thank you again for joining us and giving us such valuable, great information. I'm sure that all of our listeners, the attendees, and our Facebook participants got a great deal of information. Thank you so much.
It's been my pleasure. Terry, I just went through a couple of notes and I failed to mention, I'm sorry. One, your financials, when you are presenting, when you're looking at surety, do not think that you can do just your tax return. I've had people give me a tax return saying, well, there it is. There's a difference between a tax return and your financials. Many times you'll see someone who will try to give me just a profit and loss and balance statement, or they want to show me their Quicken books. Guys, As you grow and you want larger bonds, you need to get it done professionally and know exactly what it is that you're doing. Also, depending on the level of the bond, everyone knows that the city of El Paso requires a construction and remodeling bond. That's $25,000 and it can be done automatically on the computer. And as long as your credit is good, based on your federal ID, your social security numbers, it's pretty much a done deal. Some bonds you might be able to get taken care of depending on the value, but as you grow and you want bigger bonds, you're going to have to go through the process. I don't want to scare anybody and tell them that you can't do it. What I'm trying to tell you is do your homework, get your house in order, and get the professional help that you need so that you can grow with the sureties and grow in your business and get those big $20 million contracts.
Congratulations. Absolutely. Thank you so much again. And the information you provided has been so valuable to all of our contractors and people on the call with us. With that, I will say thank you. Please give us a call at 566-4066 if you have any questions or need any information, and we'll be sure to get the slides to you today. Thank you again, and have a wonderful rest of your day.
Thank you.